Hello guys, welcome back to another episode of Bitcoin option selling. And on Friday at around 9:30 p.m. in the evening, I decided to sell a call option of around 93,200 and also a put option of around 86,000. So this may be also called as a strangle. And let's discuss the strategy behind selling this call option and put option. Okay friends, the market has been continuously in the sideways trend on bigger time frame also. So my overview was that when Bitcoin reached at this particular level, this level is a resistance level for Bitcoin, as Bitcoin has been respecting this resistance for a few days. So this has been a strong resistance level. So when again Bitcoin came up to this level, and when it formed this particular candle, this particular red candle at around 9:30 p.m., then I was very sure that Bitcoin will never cross 93,200 up to next day, up to Saturday or up to Sunday. So I decided to sell a call option of around 93,200. Also friend, the strategy behind selling this put option was that when Bitcoin fall down into the negative direction, and when it came near this level, you can observe that this level has been a sideways zone for Bitcoin. And Bitcoin whenever came up to this region, so this region has been a sideways zone for a Bitcoin. So history repeats itself. So when Bitcoin again came at this level, there was a high probability that Bitcoin will not cross 88,000 up to next day, which is Saturday or Sunday. So I want to take benefit of this particular point, and I also sold 86,000 put option in this particular trade. So this was the strategy behind selling this call option and put option. Now let's move to the order book also. This is my order book, friends, and this is my order book. And I decided, yeah, this is my order book. And at around 9:29 p.m. 12th December, which is Friday, I decided to sell 93,200 call option, and the quantity was 4,000 quantity, and the entry price was $50. So in one leg, I decided to sell around, the cash flow in one leg was $200 in the call leg. Okay friends, similarly I decided to sell put leg also, and at around 9:28 p.m. I got the quantities for put side also, which is 86,000, and this was also expiry of Saturday. And from this account I took 2,000 quantity, and from another account, sub account, I took 2,000 quantity. So the total quantity in the put side was also 4,000 quantity, and the cash flow was $200 also from the put side also. And I have also mentioned this same trade in my Telegram group at the same time, at 9:30 p.m. I have also mentioned this trade in my Telegram group. So the people who have been already joined my Telegram group must be taking benefit of it. So please join my Telegram group. The link is given in the description, and also you can discuss about trading with the video call with me. The link is given in the description. You can make a video call directly to me. Okay friends, so this was the entry of both the legs, and it has started to exit. The trade started to exit on 5:39 a.m. in the morning on 13 December. Okay friends, because the 86,000 put option was very far, and so it started to decay, and the trade was exited at the price of 0.9, which is around $1. And same from the other account also. This was other account, 2,000 quantity put options from this account I took. So this also, the entry price was $50 and 0.9 it was exited. And let me show you the profit and loss in this particular trade. So I got a profit of around $294 from this account, and the charges was around $12 from this account. And from another account, I got a profit of around $98, and the charges was $4.13. So the total trade was almost of $400 in the, and this was a strangle trade. Now let's also discuss about the risk to reward and what was my stop loss in this particular trade. So whenever I make a strangle trade, I make sure that I get 1:2 risk to reward in my strangle trade. So how this is possible? For example, if I take a risk of around $50, I decide that I get a profit of around $100 against this particular strangle. So for example, if I made a strangle of around $200 cash flow in each of the leg, like in this particular trade. So my stop loss was placed at around $400 in each leg, in this leg also and in this leg also. Okay friends, whenever, if either of the leg suffered a stop loss, if I got a loss of around $200. Okay friends, I got a loss of around $200 if either of the leg suffered stop loss. Okay friends, and if either of the leg doesn't suffered a stop loss, I got a profit of around $400. Okay friends, like in this particular trade I have already explained it to you by showing the order book also and profit and loss, that my loss was fixed at around $200 and my profit was fixed at around $400 in this particular trade. So in this way I designed my risk to reward in a strangle trade 2v1:2, and which is a great risk to reward in option selling. And you guys should also follow this particular risk to reward whenever you are making a strangle. Okay friends, thank you. If there are any queries, please mention it in the comment section. I will definitely answer your queries. Thank you friends.